Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using the 73 quarter to 75 quarter zone as the short-term key support or the micro bull bear zone, and a break below that confirmed sellers in control and resulted in a move all the way down towards the 2055, 2056 area. At this point, heading into the open, the sellers can maintain control below 65.5 to 67.5, and the short-term bias will be bearish as long as ES is holding below that area. And any moves back up towards 65.5 to 67.5, at least the first pop back up towards that area, or even back up towards 62, 63 quarter, would be a opportunity to short the market, looking for a move lower into the 53 to 54.5 pre-market support and the 48 to 50 initial support zone, and potentially even 43.75 to 45.75 support. But as we head lower into those support zones, buyers can definitely be active, and the expectation is for responsive buyers to be active at 48 to 50 and 43.75 to 45.75. Those are key support areas on the larger time frames, and by that point ES would be quite exhausted on the downside as well. We're seeing short-term buying come into the market already based off just short-term exhaustion from 75 all the way down to 55.5. So, the market has moved essentially 20 points in a fairly short period of time in a very directional way. So we're already seeing that exhaustion buying coming into the market. But if we head down to 48 to 50 and 43.75 to 45.75, that is larger time frame support, and the buying that we get off of those zones can push ES back up towards 2060 to 62 and potentially even 65.5 to 67.5. It may not happen on the day time frame, at least back up to 65, but a move back up towards the overnight range can certainly happen off of 48 to 50 and 43.75 to 45.75. So even though the short-term bias is bearish, we just have to keep in mind that as the market pushes lower, it can attract larger time frame buyers, and that can result in some relatively strong buying even on the day time frame. So our short-term bias is going to be bearish as long as ES is holding below 65.5 to 67.5, and the focus will be more on the short side. But then as ES pushes down towards some of those key support areas, we're going to shift our bias and actually start looking for long setups at 48 to 50 first test and 43.75 to 45.75 first test, with the idea being that from there ES can reverse back up towards the overnight range, which at the moment the overnight low is 55.5, and even 2060 to 62. 2060 is a key high volume node on the larger time frames, and the idea is that the market is not simply going to fail there and never look back. So the expectation is that off of the initial support zone or the zone below it, we can quite easily get a pop back up into the 2060 high volume node and perhaps retest it. It'll still be active resistance at that point, and it'll take some time for the market to figure out kind of on the larger time frames where it's going. We know short term the market has been bearish since Friday's balance breakdown, and yesterday we saw a retest of that bigger picture balance at 80 to 82, and we saw a failure there. So for now we know that sellers are in control, but as we push lower, the buyers can step in, the market can start to balance, and go into another two-sided balancing phase. So for now, the focus will be on short side below 65.5 to 67.5, targeting a move down into 53 to 54.5, 48.50. But by that point, ES could be quite exhausted, and the selling could shut off at one of those lower support zones, resulting in a bigger bounce and a reversal back up. So those are the main ideas heading into the open. Let's see if the sellers can maintain control and hold ES below 63 quarter, below 65.5, 67.5. That's really going to set the tone for the day. And as long as that initial resistance zone holds, the bias will be bearish and will be more active on the short side. So let's see if sellers can maintain control, and we will take it from there.